Wow, the volatility madness for the entire month of March has continued into Monday's trading session. The Dow Jones Industrial Average closed up close to 200 or over 260 points on today's daily candlestick. Now, this is on the back of stimulus growth by China's central bank, which of course has been interpreted very, very positively by the US financial markets, also the European markets during Monday's trading session. The volatility madness, just to reiterate, has continued and is probably going to round out trading on Tuesday's daily candlestick. Over the past 19 daily candles which have formed on the daily for the month of March, 15 have been either plus or negative days of price action above or below 100 points, 5 of which have been over 200 points, and of those 5, 3 have been over or very close to the 300 point margin, up or down. A very, very volatile month it has been, but the overall net movement of the month of March is still is negative, which is surprising. We still have to, of course, work with and in conjunction with this downward little trend line, which is drawn in between the March and the mid-March lower high, which has been established. We still have that neckline in effect, but given today's very strong bounce off from support levels and still that Fibonacci box, we're still ticking the signals technically that the markets are healthy, albeit very, very cautiously. As we moved into the week, we had 3 possible scenarios. 1, 2 were being the bearish breakdown below support, and 3 was the unexpected bullish bounce, which just seemed an absolute one of those occurrences which had a very, very slight chance of occurring. Well, in the world of trading, that has eventuated throughout today's trading session. Again, up 260 points. Is actually, a little bit of a name for this type of candlestick pattern. Generally, we like to see 1 candle down the bottom instead of 2, but this is essentially a morning star reversal candlestick pattern. Now, it's not necessarily at the right location. Again, we still have resistance levels to overcome. If you are looking at this market and you're saying to yourself, it is wild, it is unpredictable, it seems to have a mind of its own, and as such, trading just at the moment doesn't feel right, I do not blame you whatsoever. That is exactly my take on the overall markets. Although, yes, it still is operating within a framework which we have identified over the weekend. This candlestick, given today's price action, has been somewhat of an extreme surprise. Another sentiment shift, an extreme sentiment shift occurring at support, just like it has done at resistance, just like it has done at support in the past, and again resistance in the past. The apex, or at least the oscillations or the gyrations of these swings, continue to remain smaller and smaller and smaller. So to be saying, look at long trades at this particular moment in time or at this particular area on the chart would be very it would be essentially the wrong thing to say at this particular moment in time. It'd be very reckless to say things like that. Again, cash is king at the moment, and if you are invested in the market, please just mitigate your risk at this particular moment in time. This market, again, has a complete mind of its own. A lot of people are very frustrated with what this market is doing, and I, for one, are happy to sit on the sidelines to let this shake out and just to let this market finally resolve itself in a direction which I feel comfortable getting involved in individual stock trades. We do have a game plan when it comes to a lot of these big companies like Apple and Amazon and Baidu, for instance, and Tesla. These types of trades, IBM, Google, and Facebook, for that matter of fact, breakout, retest, pivot point type of trades, which still aren't there yet and are still looking weak. But just given today's trading, type of behavior, again, volatility is continuing to increase. And again, if you do not feel comfortable, if it's not aligning with your overall perspective on the market, and I'm sure that's the case for many people around the world, it's always best to let the market do what it has to do, let it shake out, and then get involved when the time is right. At the moment, I do not believe the time is right to be looking out and chasing a bunch of bi-directional trades. The trading behavior, the trading activity, again, is very volatile. It has a mind of its own, so just let it do its thing, let it run its course, until we, start getting into some very good, or at least some directional types of trades with a little bit of momentum behind them, instead of this just whipsaw up and down type of trading environment, which we've been stuck in for the entire month of March 2015. I hope that makes sense to you at this particular moment in time. It's very important that I get this video out as quickly as I can, because again, when you see these days when the markets are up 250, then down 250, then down 300, and then up over 100, over over 80% of the trading sessions this month, more than that, 85% have been above or below 100 point swings. You know something's going on under the surface. Again, on the S&P 500, up 25 points. A lot of these markets we referenced over the weekend were sort of addressing the scenario of what happens if this pivot point fails to hold. Now, at the moment, all three markets have rallied away from this important pivot point. Again, there's still generic and broad market weakness out there, and there are still resistance levels which these markets need to retest again for the third particular time for the month of March. We're still not out of the woods. Everything isn't okay at the moment. The market still needs to prove itself to continue higher. It's not a smart idea to be going out looking for longs just on this one daily candlestick. Volatility again continues to increase. Look at the Nasdaq, another gap. Surprise, surprise. How many gaps? How many tradable gaps? We've got one during today's trading session, or between Friday and Mondays. We had another to begin last week's trading session. We've had another downside gap, closer to the beginning of March. These are three big body gaps, like true body gaps, for the entire month of March. This is very rare in the world of trading, especially when you address market indices. Again, it's just showing that the volatility is continuing to increase, and there is no real directional conviction behind any of these markets at the moment. So just to surmise at this Monday afternoon market recap, if you're not comfortable looking at individual trades or getting into the market with a directional idea or a directional trade based on what the overall markets are doing, please sit on the sidelines. Let these markets resolve themselves one direction or another. I will keep you updated with the daily price action moves. But, this market is just completely erratic at the moment. Completely erratic, highly volatile, and a very hard type of trading environment as a swing trader. It's best to remain in cash at this particular moment in time. I hope that you, take these words for what they're worth, because, again, when I'm looking at the markets and looking for individual trade setups, I feel so much more comfortable in cash at the moment until this market proves that it finally wants to trend. And I do want to see this market trend, but leading into the week, there are so many cautionary signals saying that, look, this market has a very, very good chance, a broad market sell-off down to these old support levels on the S&P 500 going back to January and February. The same is true for the Dow Jones Industrial Average, going back and referencing a lot of these pivot points, and also the primary trend lines, which we've been sort of focusing on really for the entire month of March. When we're talking about corrections and seeing an intermediate correction or a pullback back into the primary trend, this could still eventuate. Given today's candle, it's just going to have to be another 260 point sell-off to the downside until we're back at that same level. So just pay attention to these things across all three of the US markets at the moment. I hope you have a nice Monday evening. If you have any questions whatsoever, email me success@pivotpoint-trading.com. I'll see you on Tuesday for another afternoon market recap. All the best, traders and friends. Goodbye.